Yo guys, SFFX, welcome back to another video. So today, right, we're gonna be pretty much talking. This thing's changing. Okay, today we're pretty much gonna be talking about the New York Killzone, right? And per se, today we're talking about the New York reversal, if that makes sense. For example, we got London, right? London tends to be let's say you bearish, and then London tends to be a distribution time or session, right? For example, price is going lower like this, right? Price is going low. And then New York can either be a continuation of London or a reversal, right? So like right now, I'll be pretty much just showing you how to identify the reversal, right? A key high probability reversal profile for it. And it's pretty much very, 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 very close and similar to the London Power 3, right? It's pretty much just inverted, and we're using different time bases, if that makes sense, right? But key notes, right, will be regarding the London range, right? A little past that, but yeah, that's pretty much it. I don't really know what to call the range, so I'll just regard it as the London range, right? Normally, the London range would be typically from 5 to 8, right? But in this case, we're using the range from 3 to 7 a.m. New York time, right? And the time frame we basically identify this whole profile in, right? It's either the 5 minutes or the 15 minute, right? And our entry is the New York Killzone, right? Within this, pretty much this range right here. This is where we look to execute our trades, right? And if you want to be selective and special, you can use the silver bullet. I personally prefer that. It's just easier, less stress to the head, if that makes sense, right? So pretty much how this profile goes, right? You mark out the range from pretty much from 3 a.m. to 7 a.m., right? Which would be this range right here, right? And then you look for price. If you are expecting a potential reversal, right? You look for price to sweep the London lunch low, which is pretty much this low right here, like that, and then reverse, right? So I'm just gonna break down pretty much this whole pattern, right? And pretty much everything's gotta start with higher time frame. Like, this is the key, this is the footprint, this is what makes your trade high probability, if that makes sense, right? So with this one, the sweet spot can be either the 4 hour or the 1 hour time frame, right? It can even be the 30 minute or even like the 15, right? It's just that the risk to reward would be a bit different or less when you go into smaller time frame, because like 1 hour fair value gap is gonna behave based on the 1 hour time frame, meaning that if it's gonna react off this level, pushing higher, it's either gonna be targeting this 1 hour order block, or it's going to sweep it and target this highs right here, right? Either this propulsion block or this order block. They typically both order blocks, but yeah, when an order block digs into another order block, it becomes a propulsion block, right? Meaning that we hold more reference to this one. If it's going to violate this one, right, or disrespect it, we're no longer going to regard this one. So therefore, we'll be looking to see price reach these highs right here. So in this case, we've got this imbalance right here, this busy, buy side imbalance, sell side insufficient, right? Meaning that price was only delivered downwards, if that makes sense, right? And if we're expecting bullish price, we're expecting price to revisit this zone and react of it, driving price higher, if that makes sense, right? But there's pretty much this is pretty much what we're looking for within this fair value gap range, if that makes sense. This is 7 a.m., right? New York time. This is where this line is, right? So the minute you identify your fair value gap on the 1 hour time frame, right, you would scale down to a lower time frame. We got the 15 minute time frame, right? This is still the 1 hour fair value gap. And as you can see, price was dropping lower, right? It was dropping lower during London, right? And if you're going to be anticipating a high probability reversal, that means London will have to have reached a higher time frame PDRA, which in this case would be this 1 hour fair value gap, right? Then now you mark out your range pretty much from 5. No, not 5. This is a mistake, but yeah, pretty much from 3 a.m. to 7, right? Pretty much this time zone right there, right? And then you look to see price pretty much sweep this lows right here. If it's not clear on the 15-minute time frame, you scale down into a lower time frame. This is still the 1 hour time frame. This is our London lunch range, right? This is the London lunch low, right? So as soon as price draws lower from 7 a.m., right, this is our Judas swing. This is our manipulation range, right? So as soon as price sweeps sell side within the PDRA, the higher time frame PDRA, which is this fair value gap, we look for some form of displacement, all right? And when we're looking for displacement, we're looking for the recent high to be swept, and the price drawing back lower, targeting a PDRA to push price higher, right? Which is pretty much something like this, right? This is pretty much the whole profile. During London, price drove lower, hitting the 1 hour time frame fair value gap, creating the London lunch low, sweeping it, moving higher to sweep short-term buy side right here, basically creating a displacement, right? And then drawing lower, targeting a fair value gap to increase price higher, meaning that this would have been pretty much your trade if you were trading the New York Killzone, right? And how do you know that price is going to be willing to respect this fair value gap right here, right? If you can pay attention from this high to this low, right? If you take your Fibonacci and then find the 50% level, which is the equilibrium, you would see that this fair value gap is within the discount range between this high and this low, right? And a little more confirmation that can make this fair value gap high probability, right? It's pretty much within this breaker range. And if you want to look at it on a higher time frame, it's within this breaker range. The last stop candle, if you can see it, right? Just pretty much this range right here. And below it, we've got an inversion fair value gap, meaning that you could either utilize this fair value gap as your entry, or this one right here, or this inversion fair value gap, whichever one looks nice for you, or whichever one you're more comfortable with, right? And that's pretty much how you identify this person, right? It's just the same: power 3, accumulation, manipulation, distribution, if that makes sense. The Judas swing, and then from New York, and New York entries are pretty much from 8 a.m., 8 to noon, specifically till 11, just an hour before noon, right? That's where I want to be executing my trades, right? And then within somewhere around here, we have our silver bullet entries, right? Which could have potentially been this range right here, with this week right here, which is a rejection block. And if you invert it, supporting price higher, right? So I hope this was helpful to everybody. And there's a few more examples of it. This is the GBP USD one, and then this is USD market correlation, right? Meaning that this was pretty much the same day, same chart. Same day, different charts or different pairs, right? Meaning that GBP USD swept out this low, drawing price higher, right? Displacement went down, targeted this fair value gap right here, and what made this one more viable, because it's within the premium range of this whole entire range, right? We have an order block here, right? And this order block, slow to its high, you divide it in half, you're within the equilibrium range, if that makes sense, right? Meaning that this fair value gap is in the discount of this range, but the premium of this range, and it's within this breaker range, if that makes sense. And then here, It's the one we pretty much just explained, right? And this pretty much works for all asset classes, not only Forex, right? There's another example. Price sweep the high, went lower, displacement, fair value gap, drop lower. Price went high, sweep London lunch highs, went lower, went higher, went lower, displacement, fair value gap, dip. And then now, this is an example on features. Nasdaq, S&P 500. Price went lower, sweep the London lunch low, went higher, displacement, we got our breaker right here. Therefore, we're not expecting price to draw lower. And if it does draw lower, there should be a fair value gap below it, right? So if you are trading based on inversion fair value gaps, you'd have pretty much missed your entry, which would be right here with this fair value gap, right? But this would be your second entry because it's within the London Killzone, right? So pretty much when it tends to happen like this, right, I like to see what's happening within here. If I can pretty much go into a lower time frame and see if there's any potential entries or it's showing any willingness to respect price within this range, right? But if you pay attention, we've got an order block here. We've got a high here. So this range divided in half, it's within the discount zone, right? Price went higher. S&P 500. SMT divergence. Failed to break the low, right? So price was like this, broke the low. Price was like this. So still the confirmation stays, the price went higher. So hope you guys found this enlightening and all those nice things. And yeah, man, you know what to do.